They say technology makes our lives easier for work, to learn, to travel, to communicate. But there are things that machines cannot yet do. Things as important as engaging, putting themselves in your shoes, having intuition, or making intelligent decisions. In an increasingly technological world, we need professionals who provide intelligent solutions based on their know-how. Because there are things that technology cannot yet do for you. The human tech.
Good afternoon, everyone. Thank you very much for joining us today on the 10th of April, 2024. I would like to introduce today in the panel, we're going to talk about income tax return and wealth tax. And we've got several experts. On one side, I've got Pedro Heredia. Hello, Pedro.
Hello. Good afternoon, everyone.
Yes, I have in the south part of Spain, I have Michael Davies, Abogados. Hello, Michael. We can hear you yet. Can you hear us, Michael?
Hello, good afternoon, everyone. I should know by now. Very good.
Right, and we are happy to introduce you today, Jose Ramon. Jose Ramon is joining our law firm. Hello, Jose Ramon.
Hi, hello. Good afternoon to everybody. It's a pleasure to meet you, Michael.
I would like to introduce, especially today, Jose Ramon is a tax inspector on leave. He decided to join on the private sector. He's specialized on auditing pension funds, a little bit on institutions. Probably Jose Ramon might do his own introduction himself. And today we're going to talk about income tax return. And we thought it would be good to have not only our tax accountants with us, even Jose Ramon, who will bring a lot of value. Okay, Jose Ramon, I don't know if you would like to start a little bit explaining what you've done in the past, which is quite interesting for all of us, which were the other side of the tax office. Very, very interesting. Over to you, Jose Ramon.
Well, thank you very much, Ignacio. It's a pleasure to me to give you a little piece of my personal and career life in Madrid in the supervisory authority. I've worked for many years as an insurance company inspector because we took charge of the supervision of insurance companies as well as of entities who manage pension funds, who actually, in fact, is the banks. So I've paid a lot of visits to banks, insurance companies, and in the end, well, they began to hate me a little bit. It's a usual thing. And besides, I had the pleasure to travel to Brussels in many occasions when the European Union was beginning its existence, so to say. And I was a testimony of that process of harmonizing legislation about insurance and pension funds, especially. I traveled to Paris to attend meetings about every subject relating to the insurance world and pension funds and so on. And we touched every kind of aspects, like tax aspects and technical aspects relating to accountancy. And maybe best of all is we took care of investments, analyzing portfolios, every kind of products, financial products like derivatives, equities, bonds, and legislation concerning defending rights for the consumers and so on. That's well, I think I've given you like a brief resume of my activity in the public administration, and I have a lot of experience on these matters. Well,
Okay.
That's
Well, thank you very much, Sir Ramon. I think you will bring a lot of value because you've been probably into two sides, and I think you probably will understand much more citizens and trying to understand taxes and defend our interests. I mean, as well, you told us that you were very well trained and prepared to, from an independent point of view, just try to analyze contracts when we all do investment with banks or with financial entities or investment places. You could do like kind of the due diligence, trying to understand the contract, and from an independent point of view as well, advise whether that investment is worth it or is we're making money or not. Is that correct?
Yes, that's correct. That's an important point. Perhaps I passed a bit over it, but I have to underline it because part of our supervisory duty was to analyze every legal aspect, every contract, and to make sure that investors is always protected and that all the contracts comply with the present legislation. That's an important point because there's a lot of fraud, or if sometimes, you know, sometimes insurance companies and banks try to deceive people, like kind of hiding some clauses about aspects that are not beneficial for investors.
Well, actually, it's very good value because everybody has an investment somewhere else, and sometimes we all try to do most of it, but sometimes there are all kind of hidden clauses and penalties, and sometimes it seems that we're not making money. Probably the financial entities are making money, you know, and it's sometimes
Yes.
it's good to have an independent person to analyze, be able to draw up a report probably and say, what do you think about this? Yeah.
Yes, of course.
Okay, right. Okay, let's start moving on the ugly subject of paying taxes today. Okay, we're delighted to find out all the ins and outs. So I will start now a little bit a presentation talking about who's resident in Spain, who should be declaring the income tax return in Spain according to the dual taxation treaty. And then later on, Michael might explain a little bit about, for those who are non-tax residents, what is the minimum things they need to do in Spain. And then Pedro will jump on as well, talking about the tax and wealth. Please feel free to send us your questions as long as they're general, because if they are too specific, we might need to study your case. So the first thing I will tell you today, who applies and who's eligible to do the income tax return in Spain. For those who are in a calendar year, because in Spain goes from the 1st of January to the 31st of December, and you spend more than 6 months, you are obliged to lodge your income tax return. Okay, that means that you're a tax resident, and as long as you have income from abroad, and I would say this year, let's put it this way, if you're earning pension or income from any source of pension, over 15,000 euros, then you have to lodge it through. Obviously, if you have more investments, and depending whether you have pensions, investments, or money from rental, etc., you might require to do it even though you don't reach that amount. For example, if you're renting out a property, whether you're making a loss or not, you are obliged to do your income tax return. If your investment is being, let's say, carry out in the UK and is tax-free, but you're still making money and it hasn't been taxed at source and Spain didn't tax you, then you have to lodge it. Sometimes lodging the income tax doesn't mean that you have to pay taxes. For example, if you don't reach 15,000 euros, obviously it's very likely you're not going to pay taxes. But in some cases, you might be in a boundary which you are not obliged, but if you lodge it, you will end up paying taxes, okay? I want to be very simple so we could get into the specifics. And as I said, don't get confused about residencia from an immigration point of view, which is one evidence for you to put yourself into the picture, because the way it works, you need to become resident. So you need to be legally resident in Spain from an immigration point of view. Once you are registered at the immigration office as a resident, then you need to inform the tax office that you are living here in Spain and register, especially if you are a foreigner. Okay, then once you register and the tax office knows you're here, we highly recommend you to disconnect from your home country. For example, if you are contacting us from the UK, I recommend you to report it and say that you are no longer a tax resident, and then you inform Spain. Some people doesn't do it that way. Some people just jump on here. They didn't disconnect it. There are certain forms like the DT1 form in the from the UK that you need to report it. To report it abroad that you are tax resident in a different country, you need to have a tax certificate from Spain, pretty much saying that you are a tax register now here in Spain. Okay, once you've done all that job, then you will have to declare your income tax return in Spain. Income from pension, income from work, income from interest, renting properties, etc., etc., etc. Now, if you are, depending on the area where you are contacting us from, the period of time for the wealth tax obviously is going to be always the same. So for income tax return, it goes from now, April, until the 30th of June. And the wealth tax as well. It will happen exactly the same. Now, not in every single community, you'll have to pay wealth tax, okay? For example, in this community, Comunidad Valenciana, you don't pay the wealth tax up to a certain level. That's being announced. This year we are declaring wealth tax, but the government did announce that it will remove that. Okay, now I know, Michael, in Andalusia, they don't have the wealth tax except the solidarity tax. And the same happens to the Balearic area and Madrid, etc., etc. So this is two important things for you to bear in mind now. From April to the end of June, income and wealth tax, depending on where you are contacting us from. Now, going back to I'm going to publish here on the panel as well the rules that goes from the income tax return. It's a sliding scale. It depends on personal circumstances, whether it's husband, wife, children, etc., allowance, and it will really depend on your income, your allowance from family. And you will have to report it, and the tax to be paid, in case there is a tax paid or a rebate, it will be paid in two stages. One, on the 30th of June, 60% of whatever tax you need to pay, and 40% on the 1st of November. Okay, this is for those who are tax resident in Spain and they are obliged to pay taxes here. Okay, now I'm going to pass over to Michael now, if he could explain us a little bit, how about non-resident tax and how does it work? And he could introduce himself as well as an excellent lawyer. Over to you, Michael.
Thank you, Ignacio. And welcome, Jose Ramon. It's the only person on the panel I haven't met before. Nice to meet you. Okay, so for those that don't know me, I'm Michael Davies. My firm's called Davies Abogados, Solicitors and Barristers, and we're based down here in Andalusia on the Costa del Sol and down here in Almeria. Okay, so the non-residents, what do they have to do regarding tax? So basically, if you've bought one property in Spain and you have a bank account, which is like a normal scenario for a couple that have retired over here in Spain, basically you'll have electricity, water, rates, rubbish and community of owners that will all have been set up for you by your lawyer, hopefully, by direct debit on your new account in Spain. And then once a year, you've got one extra obligation regarding this Spanish property while you remain non-resident. And that is to file the non-resident hypothetical income tax return. Some people by mistake call it wealth tax, but it's completely different. It's non-resident hypothetical income tax. So basically, the other people just call it the 210 form. And basically what it is that every year, either yourself, you can't set it up by direct debit, yourself, or via your lawyer or accountant, which is definitely what I recommend that you do, and it's obligatory if you have more than one property, you have to actually present a form 210. You always pay it 1 year in arrears, and you can pay it during the whole year. So if you've bought in 2023, you've got until the end of 2024 to make the payment. Most lawyers that handle the conveyancing will also offer this service going forward, or at least point you in the right direction for somebody to do it for you. All that it is that the tax man sort of considers that you rent out the property every now and again and don't disclose it to them, or something a bit like that. And what they do is they charge you a small amount of tax. So the way they calculate this tax, or your accountant will calculate your tax, it's done by self-assessment, is he will be asking for your last year's rates bill. And on that rates bill, there's a thing called the catastral value, which is normally quite a bit lower than the market value. And then what they do is that they consider that your income is 1.1% of that amount, and then tax you at 24.75% rate of that figure. To cut a long story short, if you have a property in Spain worth, 200,000 or 300,000 euro, you'll probably end up paying, if you're a married couple, maybe 300 or 400 euros in the tax, and a couple of €100 to an accountant or solicitor to make the return for you. If you have more than one property, you've also got this obligation. Some people come to us and say, oh, it's so unfair because we're non-residents, and that's why they're doing it. No, Spanish people, residents in Spain, also pay hypothetical income tax on properties that they belong to them, but are not their main home. Okay, and because you're a non-resident, the only property you've got in Spain, you're a non-resident, can't be your main home. That's why you pay the tax on it. Okay, so there's nothing unfair about it. It's just a tax that everyone pays. I've got a secondary property in Seville. I don't live in Seville. I've got to pay the hypothetical income tax. It's disguised in the rest of my income tax, so it's not as obvious as the 210 form for non-residents, where they present just this form. So that's it in a nutshell. This is obviously for non-residents that are not renting their property out. Now, if you rent out the property and you're a non-resident, things get a little bit more complicated, because what happens is every 3 months, at the end of every 3 months, if you're renting out the property, you have to declare what your income has been on the property that you've rented it out and how many days. And then you have to pay 24% on those rentals. Remember, since Brexit, British people can now not deduct the expenses that they've suffered to generate that income. Okay, and also, let's say that during the year, you've made your 4 declarations, each one declaring the income made from rentals during the previous 3 months. At the end of the year, you finish with you will have paid all the taxes on the period that you've rented it out, but the following year, you still have to pay a non-resident imputed income tax return, but only on the days that are proportionate on the days that you did not actually rent it out and pay the tax on real income. So in other words, if during a year you've rented it out a total of 100 days, on the other 265 days, you will pay non-resident imputed income tax. I hope it's not really very complicated. It sounds a bit sort of messy, but basically all you need to do is, once you've purchased your property, basically get the solicitor that handled the purchase to see if they've got someone in their office that does these annual returns, and if not, ask them to point you in the right direction so that it isn't left unattended. But not very complicated.
Okay, Michael, thank you very much for just clarifying here. Now that everybody in this panel, and we know whether we are residents or non-resident, or some of us, we might be in the boundary. I'm going to pass over to Pedro for him to carry on with just a briefing on what is the income tax and wealth tax. And if you wish, Pedro, over to you, and then we could after go into specifics. Over to you, Pedro.
Okay, thank you very much, Ignacio. Okay, just to summarize, obviously it's been said about the income tax declaration, which is holding right now from some days ago until the 1st of July. Everyone has income, any kind of income, and last year from 1st of January to 31st of December should be declaring in case it's an obligation, because not everyone has an obligation to make a declaration, But obviously, whenever it's checked that it's an obligation to declare, obviously, a pay, it is extremely important. And this is something that we always try to prevent and explain and obviously advise on clients and according to the double taxation treaty. There are many investments, there are many pensions, there are many situations where sometimes the income that is got by government pension, for example, and shouldn't be included as a income, should be declared as an exempt income, which in pure is like exempt, but it's not purely exempt because normally this is added to the rest of the income in order to increase the percentage to be taxed. But obviously it's not included in the income and it's not included in the reduction on the double taxation treaty. This is just an example. Or maybe sometimes the pension plan, it is said, because you can Google and say, well, it looks like that my pension is valued, but it's not included in the wealth tax. Then needs to be checked if it should be included in the wealth tax according to the European Union regulations in 2018. So income tax declaration and wealth tax is done now. This is the period to do it at the same time, which is now in April, May, June. And regarding the income tax declaration, obviously, any capital gain, any interest, any dividend, and then we have to be set or checked if some part of the income is paid in your home country and rest in Spain, and sometimes is fully paid in Spain. Normally, and this is a criteria where you are resident, in this case in Spain, most of your income that you pay will be paid in Spain. Example, you get a pension, you get a private pension, a state pension, which is in most of the convention between Spain and some other countries, is paid fully in Spain. Sometimes when you get a rent from a property, those ones that you have already paid in your home country, then is deducted in Spain as a double taxation treaty. The main purpose is not to pay double. I had this morning an appointment where I realized that it was a new client and he's been doing the declaration wrongly in the past because he was declaring the income what shouldn't be declared as an exempt, but also as well was not making properly the reductions on that scenario. As well was not deducting social security, in this case was an American citizen, was not deducting the social security costs that he got and was paid in the United States. So we realized that the past income tax declaration was done wrongly because it was not purely said there was an income was exempt and some of the taxes paid was not deducted. And with the wealth tax, if you are resident, there are regional situations where it's Madrid, Andalusia, and at this time it's just those regions are exempt on wealth tax. We have another kind of tax, which is solidarity tax, which is over 3,700,000 euros. And wealth tax, for example, in Valencia region where we are, it is expected, I think is one of the questions being made, is expecting that it's going to be eliminated for next year, 2025, but we are still waiting for this announcement. And anything that is over the allowance is 500,000 euros, plus in case that you have invested in a property where you live as a resident in a property, another 300,000 euros individually. So from there is a scale, and obviously this is purely connected with your income. If you don't have any income, could be reduced drastically to 80% of the quota that you should pay on the wealth tax. But obviously the wealth tax at this time as a resident in many of the regions in Spain is compulsory, except Madrid and Andalusia, and hopefully in Valencia for next year. And in case that obviously it's all the assets that you have worldwide, not just in Spain or worldwide, minus any like passive or products like a mortgage, for example, like a loan, will be reducing this kind of base to be taxed. Everything which is over 2 million euros, even though it maybe not be taxed because of a mortgage or loan, should be declared anyway. And it's compulsory. And this time, and I think, Ignacio, basically this is the summarize on this. There are obviously many situations where I don't think is the time right now to explain specifically about reductions or, for example, the reduction right now that we had a client that we explained about the solar panels. everything what you invest is, for example, last year on solar panels could be reduced a maximum 5,000 euros on the base, or in case that also has reduced the consuming on 7%, obviously all this needs to be proved. There are some other kind of reductions and some other kind of deductions that may be on the quotity that should be paid. But there are some complexity situations where there's one part of the income tax declaration is for the government and the other part is from regional areas. So there are differences, really real differences from one area or the other area in Spain. Not too much difference. I mean in terms of amount at the end that it should be paid, but there are some difference. Just to summarize, there are things that are 64 deductions in total regions in Spain. Some of the ones are depending in Catalonia, Madrid, Andalusia, Valencia, depends. There are some differences. But I think we should go just for the first question I can see here. And let's go for the questions, Ignacio and Jose Ramon and Michael.
Mm-hmm. Okay, Pedro, would you like to start reading through questions and answers? And please feel free to interrupt any of the person in the panel.
Okay.
Pedro, would you like to start with questions and answers?
Let me start.
One
question from Graham, and it says he and his wife they spend more than 183 days in Spain, but according to UK tax rules, they are also tax resident in the UK. They own a property in the UK for own exclusive use. That is important too about this specific case. So we own no property in Spain. We rent an apartment, and we are retired. Practically, our savings held in bank accounts in the UK. So do we have a complete Spanish tax returns? Well, these situations is it's not extraordinary. It happens sometimes, but I would like to read just specifically, literally, the paragraph that says that double taxation treaty between Spain and the UK. Let me just look for that. It's Article 4.2. It says, well, by reason of a double taxation treaty between Spain and UK, someone is a resident of both contracting states. He's saying that they spend more than 193 days in Spain. What we've been repeating many times, that general rule is that you spend more than 183 days in Spain from the 1st of January to 31st of December. Well, then his status shall be determined as follows. And this is what it says. He shall be deemed to be a resident only of the state in which he has a permanent home available to him. If he has, in this case, they have clearly said that they have a home available in the UK and not in Spain, or in Spain is renting it. But in the UK, they have a home available to them. If he has a permanent home available in both states, he shall be deemed to be a resident only on the state which his personal and economic relations are closer, central vital interest. Well, assuming what it says and Graham is describing, I personally think that this should be focused and derived to the UK system on taxes. Obviously, he is resident in Spain. According to the UK rules, he is also resident in the UK. He should be on terms of taxes. I mean, he's paying taxes in there. The economic center of his vital or his personal and economic relations are closer in the UK, not in Spain. So, in my opinion, it should be done in the UK.
I don't know if anybody else wants to carry on, or Pedro, would you like to carry on with the questions?
Okay. Let's go for when is from Alexander. Thank you, Alexander. When will the wealth tax be abolished in the Valencia region? That's a fantastic question. We don't have a crystal ball. What we know is that the new government in Valencia region did announce on terms on taxes, did announce some other things, but in general, two specific issues. One of them, it was to reduce the quota to be paid 99% on inheritance tax between first grade of family members, between spouses and parents to children, on inheritance and on gift. And that has been already done, has already been approved, and a new act reducing that from May last year. And it was also announced that it was going to eliminate wealth tax, as it has been done accordingly in Madrid region and Andalusia region. What we expect is that during this year, it's going to be done on those terms. Why it has not been done before, it is because this in Madrid and Andalusia is the government, this is about politics at the end. Madrid and Andalusia, the government is a PP party. Right now in Valencia region is also a PP party, but the government of Spain is the other flag, is like PSOE. And they saw that it was like some territories that was getting some benefits on taxes for the residents that were there without paying wealth tax. They include a compulsory act, which is the solidarity tax, to tax so those members or individual persons that has more than 3.7 million euros. So what they want in the Valencia region, as far as I understand, is what they want is to make an act that even though they eliminate wealth tax, will not be compulsory solidarity tax, which I understand is extremely difficult. I don't think it will happen. But they are trying to say, well, we will eliminate it, but in order to avoid, well, solidarity tax. I don't think that will happen. In my opinion, Alexandre, this will be, during this year, it will be approved and will be accordingly a compulsory for next year, 2025. But we will see, we will see. Okay. Worldwide asset, Matthew, worldwide assets and wealth tax implications, ideas on asset protection from measurement, let's say tax, worldwide assets and wealth tax implications. Well, I mean, once you become resident in Spain, you have to, in case that your threshold is over, in this case in Valencia region, 500,000 euros, or is over 300,000 euros individually on the investment on the permanent property that you are, then you have to make the wealth tax. Wealth tax is including, well, I would say most of the investment products on this worldwide. At the end, is something that the implications, obviously, there is a scale. Ideas on asset protection for measurement. I'm not sure if I understood Jose Ramon or Ignacio. When it says measurement, I understand because when I read the word protection, Matthew, I understand that you want to protect against what? Against to pay more taxes than what you should, or against some other kind of, I understand it's taxes. At the end, wealth tax, you need to declare it according to the rules of valuation on the wealth tax. Let's say at the end of a period of a year, of a previous year, that where you are making the wealth tax, in this case on 31st December 2023. I don't know if Jose Ramon or Ignacio or Michael, you can add something to Matthew, because I don't really understand exactly the question.
Where are you, Pedro? What number is it?
I think it's Matthew, the worldwide assets and wealth tax implications. Implications, obviously, you need to declare in case that the threshold, you cover the threshold. Worldwide, also, you need to make a, once you become resident, I don't know if it was said by Ignacio, I think you already mentioned that. Once you become resident in Spain and you become tax resident in Spain, you have to declare the following year, from a period of 1st of January to 31st of March, anything that is over worldwide, not in Spain, worldwide, anything where it's over 50,000 euros. Bank accounts adding together, properties that it was acquired more than 50,000 euros, an investment valued over 50,000 euros. You need to declare, and it's not a tax, but you need to declare. And then obviously, any income that you make from those, rental, annuities, interest, dividends, anything you will have to declare in the income tax declaration.
Pedro, just before you go, Matthew is saying here, if one has a rental property in the US, is there any way to protect from taxes by putting, then my understanding, Matthew, here, if putting them into a trust or corporation or limited, I mean, I don't see a problem The only tax that you will have to pay in Spain is if you make any income out of it. So let's say if you have that property into an LLC, or and you pay taxes in the US and you don't take any money in your individual, because if you've put it in a company, then you pay corporate tax in the US and it's not any longer in your name and you don't receive any income. So for people to understand, the aim of the income tax return is, as long as you have income, if you decide to put all that in a saving, well, let's put it this way, you put it in a company in the US or in the UK, you don't receive any money because you already cash your money before being tax resident in Spain, and then you're living from savings, then you will not pay tax. Let's put it this way. You are trying to relocate yourself. You're moving over to Spain. Before you're a tax resident, you just cash all your money and then make a plan of living here. You live on savings, okay? And you don't receive any income. That's an option. That's an option. Specifically for what Matthew is saying here, whether to put it into a company, into a trust, or, well, the problem with the trust, as Pedro said, you'll have to declare it on the 720. The company, you'll have to declare that you're the owner of the company. But if you pay taxes abroad, for example, like a company, you're not subject here to income tax return. So the bottom line, if you don't have income from interest, from capital, or from work, you don't pay. The 720 that went from January to March is only a declaration. So it's an informative declaration that you will inform the tax office, but that doesn't mean you will pay tax. Okay. Michael, do you want to say something else here?
Yes. Just to sort of make people aware, because we see a lot of financial advisors and various companies, of which you know the name as well, I can't mention, that basically prey on expats that retire over in Spain, and I've got their nest egg, and they sort of, they exaggerate inheritance tax in Spain, wealth tax in Spain, to basically sell them various products, or set up, put their Spanish property in the name of an English company that they don't need at all, because in that particular case, there may not be. I mean, I've seen cases where, as I say, a company that we both know the name of, literally sells to someone that's going to leave everything to their spouse and children, sells them that it's convenient for them to set up an English company, put the property in the name of the English company. We're talking about normal people, not people with lots of money or anything, people with a 200,000 euro house. They end up with the house placed in an English company to save inheritance tax. What inheritance tax? It ends in a fear for group 1 and 2 spouses. Makes no sense. And then they're also sold sometimes some financial products, sometimes quite complex, Spanish compliant bonds of different types, where they put it in an insurance wrapper and all these things. Sometimes the only bad consequence for the client is extremely expensive annual fees and basically a lot of extra fees if they pull back their investment early and things like that. But what I think is, just as a word of sort of advice would be, is don't take legal advice or tax advice from the people that are going to sell you the product or the structure. So yes, okay, somebody comes along to you, a financial advisor, and says, look, I think you should do this. You should buy these, these bonds or this life. Okay, listen to him, but don't set it up with them. Then go and see your solicitor, someone that just knows a little bit. Sometimes you don't need to know rocket science just to be someone that's in the legal profession to see whether that makes sense or doesn't make sense, because people wouldn't believe. I mean, the amount of people that do tie themselves up into these products. Then the claims are very difficult, because sometimes they're not based in Spain, they're based in Ireland, they're based in Malta, they're based in whatever. You don't even know where to handle the court case, to what governing body to put the complaint in. So just don't take legal advice from the financial advisor selling you the product or the company they want to set up or whatever. I don't know if you've come across situations like this, but we come across many situations. As you know, we do lots of inheritance work, and when we go to handle inheritance, we find that the money is now offshore. That it's in the house. We don't need to go to probate because it's in the name of an English company. Why on earth have they done all this?
Michael, actually, that's a very, very important point what you brought up. I discussed it with Pedro and Jose Ramon recently.
Yeah.
And actually, when Jose Ramon just joined us, I thought that was the very interesting point, because somebody independent that could really tell you what is this product and what is not that product, because I fully agree with you. It's full of people advising everywhere, and probably it's too late.
Yeah.
And I encourage you to always discuss it with somebody of your confidence that is not selling you the product. I fully agree. And anyway, I agree, Michael. And there is being a lot of structures about trying to sell, avoiding inheritance tax. I agree. I mean, in the old days, you know the companies that they were just publishing, and it was all just crap, it was just
no, absolutely. I'm still coming across them, and now they're set up in this, and in this mess. And the thing is, they don't prey on very wealthy people, because those wealthy people are getting their own. They just pick up the phone and speak to their lawyer or their accountant and say, "What was this?" They say, "That's rubbish." So that's the end of it. They're preying on literally just people that have moved over Spain. They've got their house over here worth 300,000 or 400,000 euro, and then they've got their nest egg of 200,000 or 300,000 euro, and it's on those people that they sort of prey and tie them up into these complex.
I mean, my advice here, Michael, is before you just commit yourself, put money, spend money, and know what you're investing or where you're investing, just to get independent advice. But again, as Michael said, not from the same person who's got a conflict of interest, obviously. And then trying to see whether the product is good, the product is not good, what tax implication. And I agree, Michael, a lot of people trying to complain. Where do you lodge your complaint? Oh, okay, you're a Spanish resident. Okay, but this product is not here. The broker is not here. So what do you do here? You have nothing to do here. And unfortunately, this did happen, especially in the old days, Michael. I mean, now I don't see that, probably because they are going more and more after, but probably you've went into an recent experience about it. I don't know if that was the case. I don't know if Jose Ramon wants to add something from the other side in the old days when you were inspecting.
Yes, I just wanted to highlight an aspect of what you're talking about that it seems to me is quite important. From a technical point of view, I can assure you that it's impossible to fully analyze and understand a financial contract, a financial product, without knowing the conditions about accountants and mathematics, without fully understanding all the technical aspects of a product. It's not possible to analyze the legal aspects, because it's simply that you don't understand what you're reading. For example, what you read in a contract about insurance or financial or everything. For example, you read about risk capital or the mathematical provision of an insurance life. You cannot understand even the tax legislation. The income tax expense, you cannot understand it. That's the point I want to discuss next week with Guillermo. I hope to shed some light on him, because I hope to help him to understand this legislation. But it's quite important. And that formation, that background, for example, a tax inspector in Spain does not have that background. That the background of actuarial and mathematical and accounting background, knowledge to understand these products. I think that I can carry out, I can add value with my expertise in that matter.
Okay, that's good. Pedro, shall we jump on to going back to questions and answers? Obviously, we're getting a lot of them. Do you want to pick the one that you are going through?
From I think it's Jose.
Questions and answers we should focus on. And the ones who are probably...
I have my pension from the government in the US and my SA, so Social Security income as well. My pension taxes should be paid in the US, but declared in Spain in this case. obviously, according to double taxation between Spain and the US, you should be declaring that in Spain, the social security pension in Spain, but it would be subject to deduct whatever you have already been paid in the US social security. And the government pension, we need to add it as an exempt in order to increase maybe the percentage to be taxed to the other pension. So government pension is exempt, but is not purely exempt. We include it, and it's added to maybe increase in the scale the taxes or the percentage to be taxed in the rest of the pensions. And the social security needs to be declared in Spain, even though you have already declared in the US and paid in the US. And this cost, it will be deducted from the cost that should be paid in Spain, or taxed, sorry, not the cost. Okay.
Pedro, Heather is asking here, I mean, we are all hoping, Heather, that the wealth tax will be abolished, and hopefully next year on the 1st of January. We just hope it, right? Now, does it mean...
We understand will be from the end of this year. I mean, for the following year, that's right.
Yeah. So this year, we will still need to do the wealth tax.
Yep.
Okay. And from the 1st, if they abolish, then that year, that will not count any longer. Okay. Or before. Okay. 2024. But we don't know. Okay. This is subject to politics. They promised they will remove it in Valencia. I think they will. I don't know the date. We're just guessing. Now, you're asking whether that will mean that we'll have to pay solidarity tax. I did put you in the panel an article about wealth tax and solidarity tax. And the answer is, if you go over 3,700,000 euros, yes, you will have to be subject to solidarity tax, okay, in Valencia region. Okay, Pedro, please carry on. I just did mention, I wanted to make clear this.
I will be reading the following one by Al. Thank you, Al. He says, are US-based pension funds or 401k and Roth IRA exempt from the wealth tax? He says, I can't seem to get the same answer from multiple tax lawyers. I can figure that out. I mean, I searched on that, obviously, by different, and I can see there are different answers. If they're not exempt, why nobody seems to be able to explain this? Is because, I mean, in this case, it has not been approved, inscribed, or done, these pensions. According to the, I think I already said that, we have a European Union regulations from 2019. I think it's 1238, 2019-1238. Let me just get I will tap it down. I will write it down in this case to you in the chat. And it's not exempt if it's not under these rules, under this umbrella of the European Union rule, this 2019-1238. So it is not exempt. Okay.
Which probably, Pedro, that might change in the future as well.
Yeah.
Because I find it very unfair treating European products.
Absolutely.
Ramon, European products are treated one way, and the non-European products are treated completely different and subject to wealth tax. You know, this is something on and on that tax office is discriminating people from the country they're coming. I remember, I don't know if you remember, non-resident tax, it was different for non-European and European. I remember even inheritance, Michael, if you remember, they were treating different. And this on, especially Pedro, Roth IRA, big question always, is it subject as well to wealth tax? And this is what Pedro explained. So anyway, we'll carry on.
I have already attached Al. I think the name is Al. Let me just check it because, okay. Good.
Right, let's move on. Yes. Pedro, would you like to pick the next one?
When living over 6 months, a year in Spain of a NLV is a non-lucrative visa. So he's living more than 6 months on an NLV. Does Spain tax a US government retired employee pension? Does Spain tax a US Social Security? Does Spain tax funds withdrawn from US IRA accounts? Yes, I mean, obviously, they will have to be declared in Spain, all those, except obviously the government retired employee pension. if it's we call it civil servant, but let's call it public government pension, those ones are exempt in Spain. In this case, from the US. Is the income in a limited company in the UK exempt from the wealth tax? Well, it's income has some relation with the wealth tax, but obviously wealth tax is assets they have in Spain and worldwide in case that you're a resident. So wealth tax is not just subject to income. Okay. Obviously, as I think I said that on wealth tax, if you don't have any income, even though you have a lot of assets, but you don't have income, then it could be reduced drastically to 80% maximum. The quota that should be paid in the wealth tax. In case that you have income, that reduction is not compulsory. Okay. What else, Ignacio? I mean, let me just.
I think. Do you go, Pedro? Do you go to? I'm working in the UK and get paid in the UK. Do you go to that one?
Okay. Let me just get it. I'm working in the UK and get paid in the UK and pay tax as and no income in England. Staying in Spain, 100. Well, I understand is no income. Is that right, Ignacio?
Yeah, that's my understanding as well.
In Spain, 183 days or more, and I have 2 homes in the UK and 1 in Spain. And who do you pay tax? Well, it depends obviously when you do the work. If you do the work in the UK and you travel to UK in order to make the work, you will be paying taxes in the UK, and then as you are resident in Spain, you will be declaring in Spain those income minus that have to be deducted whatever is being paid in the UK as a double taxation treaty. In case that the work is done in Spain and fully in Spain because you are working, let's say, remotely in Spain, then you shouldn't be paying taxes in the UK and you should be paying taxes in Spain. This is a little bit complex anyway. But this is mainly this idea. Okay.
Right. I think, Pedro, they're asking here as well another questions about, well, somebody who does not spend here, I don't know the name of the person, more than 183 days in a calendar year. Obviously, you don't have an income. You're not tax resident. Okay. But she's saying that she's registered with the tax office, but she never spent more than 183 days in a calendar year in Spain, and she doesn't own a property. I don't know if the question here.
I mean, if it's not resident, I understand what you said. He's not really resident. He's resident, but he's not spending more than 183 days. So could be that he's not tax resident, but it has an authorization to be resident in Spain. The problem here probably is to renew the residency, probably in the future.
Yeah, I mean, let me clear up. But I'm sure that some of you might be confused. I will say it again. If you have a permit, and there's a residency permit, that's one thing. Okay, for example, you've got a golden visa, which is a hot topic today because of the announcements of the government. Okay, you've got a residency card, but probably you spend less than 183 days. Now, if you're going to spend less than 183 days, I wouldn't recommend you to inform the tax office that you're a tax resident, because this is not true. Okay, so here the question that you're bringing is you spend less than 183, but you did register with the tax office. Now, my question to you will be, I don't know what kind of residency permit you have. If you have the non-lucrative visa, then you must have more than 183 from an immigration point of view. If you have a golden visa, for example, you don't have to, and you don't have to register with the tax office. Let's bear in mind, doing the tax return is self-assessment here, okay? So even though the tax office could inspect what you have, what you don't have, and what you should be declaring, you are doing self-declaration. And this is where we are at the moment okay? We are in period to do so. Right. Another tip of advice, if you're relocating to Spain and you're selling your property, we highly recommend you to do it before you become tax resident in Spain. That doesn't mean that probably you could not claim the allowance or the exemptions, but it is much clean, much easier, much better if you sell it before you register as a tax resident. Nevertheless, you could still reinvest, selling your main property and reinvest in Spain and be exempt, yes. And if you're below 65 as well, you will have an allowance on selling. We wrote in our blog, you could check about capital gain tax, and we really explained there all the possible scenarios. Okay, shall we move on, Pedro?
Yeah.
I don't know if anybody here wants to add something, Michael or Jose?
I have nothing to add.
Okay, right. Pedro, would you like to carry on with some more detailed questions here?
Okay, let's go.
We're getting a lot of them.
Yeah.
But when will solidarity tax be abolished? Well, that's a good question. I think when we probably change the government, if the new government decides to change the solidarity tax, that
Exactly.
will be
Or if it's in well, it will take some time in case a resolution by a judge decides. I mean, it happened with the Model 720 about this threatened fines that at the end European Court said that obviously there was but in this case, well, I agree with you, Ignacio, whenever the government changed, probably.
I mean, we have two fights here. One will be the case through the courts, which it goes and it takes its time. And we have the other option, which is the elections and the new government probably just removing and abolishing that law. So that's a very, very interesting question, but we don't know. Okay. Right. Pedro, more questions that we have. The 401k is probably a lot of questions about this, yeah? For the wealth tax.
The retirement account must be declared, and the value that you can get is at the 31st of December from the previous year. So it should be declared in Model 720, it should be declared in the wealth tax. And is the value on the 31st of December. Okay? Which is whatever is the value on that date is the value you need to declare.
Right. Some people here are saying
someone said, okay, well, I will withdraw some money from there and we put it in a bank account. Well, then so then you will have to declare the accounts anyway. I mean, at the end, it's going to be included anyway.
Right. I mean, I encourage Matthew and I encourage for most of you who have a specific question, I recommend you to organize an appointment with us or with whoever you trust and to do a simulation. The reason why, because the best way to know exactly how much would it cost you if we could do a different simulation. So how much would it cost me if I do this move, I do that move or the other? And then you can have all the tax implications. And I think that's really worth it. So you can make decisions before you even commit yourself and do a decision. And that later on you end up with probably a high bill that you never expected. Do it always before you do any move. Just double check with your lawyer. Okay, and I think you will save money this way. I really hope so. Right, George is saying deducción por vivienda habitual. I really don't know if what you mean here, Giorgio, is that you will not pay taxes on your main property. I don't really know what you refer to wealth tax or income tax, but there is a lot of implications for that deducción por vivienda habitual. Right.
Yeah. Probably is about those who already bought before 2013. Also, I think there's a question I have read. I mean, some questions regarding selling a property outside and maybe buy another one in Spain, which is going to be a permanent home. But obviously, you become resident, then you have a period of time of 2 years to sell a property where you were living at least 3 years in your home country in order to reinvest it in Spain and not to be able to pay capital gains tax on the selling of the property in your home country. So 2 years, whenever you move to Spain to sell a property in your home country, and then you have once you move in another 2 years, once you sell another 2 years to reinvest that money. I think I have read that in the questions regarding some, I think from New York City, selling a property in New York City. I think it's from, let me just check, from Eugene. And
Right.
what else, Ignacio?
Yeah, I mean, we're talking about
Another question by Heather about wealth tax again in Valencia ends in 2025. Does this mean that tax residents will have to pay Spanish solidarity tax? Yes, they still have to. It's compulsory. What I try to explain is that they are trying to write down an act in order to defer this solidarity tax, but I don't see that that's going to happen. So it will have to be paid anyway, Spanish solidarity tax.
So just
Right.
one little note, because there's lots of people asking about a solidarity tax, but I don't know if people are aware, you only pay it above 3 million euro. And remember that if it's a married couple, it's basically 3 million euro each. So we're talking about over 6 million euro if it's a couple. I mean, obviously there may be a few out there, but not that many. So,
That's a good point. Yeah. Right. Jose Ramon, anything else we miss here? I mean, there are hundreds of questions, and I'm sure some people might contact you if they want to discuss anything in particular, or either Michael.
Ignacio, somebody is. I thought it was strange that nobody was asking. Somebody's just asked what's happening with the golden visa.
Yeah. Well, that's a good question.
Do you want me to take that one then? Shall I take that one?
Yeah, go for it.
Okay, so with the
To wrap
golden
up.
visa, what you're reading, maybe heard on the radio, in the press, or wherever, is basically that by surprise, yesterday, the equivalent of our Prime Minister, our President, Pedro Sánchez, announced by surprise that there's no longer going to be any more golden visa or investors visa. So we don't know much more about this. Could he change his mind? It doesn't look like it, but it could still happen. For those that have already managed to make the presentation, we expect there'll be no problem at all. For those of you that are sort of going through the process, have asked your solicitor to do it for you, it will all depend on, because we don't know when the cutoff date is. He hasn't told us what date the golden visas can no longer be applied. So if you've got everything ready to go, present it straight away. If you haven't, you've still got to spend some money to get to the point of you being ready to think about it twice, because we don't know. If you haven't made the purchase yet, maybe it's time to sort of think about it before you make the investment, because we don't know. So, I mean, have you got any idea, Ignacio or Pedro, or like me, or you're in waiting mode? We don't know when the cutoff date is.
No,
from
I mean,
Pedro Sanchez,
I don't even know, Michael, if it's going to happen, but we don't know.
Yeah, absolutely.
You know?
I'm hoping that in the end he'll change his mind. I know lots of people are going crazy about it, especially basically real estate firms that deal with the high end properties. Yeah, so I don't know. We actually presented one on Friday, so where the client called us. He's
well,
really happy.
I think you might say you will be safe if you've lodged it. I think we are advising people now, as you said, people buying a property now in Spain, subject to that specific visa. There is no guarantee because the law hasn't been approved, and there is no guarantee now. Do we expect that to happen? I mean, probably only on property, and the rest of the conditions I did publish here on the message board. It will carry on, like investing €1 million in a bank or €2 million public debt. It might carry on. It's only concentrated on property, but it might be a bluff, and they will not just change it. You know, I don't really see it's sensible, and I don't really know if they will really go for it. But nobody knows. It's all about politics.
All we know is that our president, he did a press conference, and he said he was doing away with the golden visa. He literally said that. So we don't know anything more about it.
But sometimes they do say a lot of things, don't they?
I know.
Right. Okay, guys, thank you very much for joining us today. We're running out of time. I know we have 100 of questions. Unfortunately, it's all about paying taxes, and we would like not to pay many, probably. Feel free to contact Michael, Pedro, Jose Ramon, or myself. Organize a video conference for a specific. I'm sorry, we're running out of time. If you go into our live TV program here in the website, you've got a lot of webinars as well, in case it gives you more information. Taking 1 hour of time is a lot, and I thank you, Pedro, Michael, and Jose Ramon for your effort. Even Juanfran, who I'm sure he's going to be delighted to send a nice video over to you all guys. Okay, well, we'll see you hopefully in 2 weeks, and hopefully we'll carry on discussing the law in Spain. Over to you, Juanfran. Thank you very much, all.
The world turns, and with each turn, a change. And each change makes it more complex, unpredictable, enigmatic. The world keeps turning. And from the Pellicer and Heredia practice, we anticipate everything that is going to happen. Brexit, artificial intelligence, new commercial borders, legal tech. The world keeps turning, and it commands the reliance on international lawyers who are capable of interpreting this new reality with integrity, honesty, and transparency, offering answers to so many new questions. Whatever it is, ask us. At Pellicer and Heredia, we know how.